Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. It's a flat day of trade so far, but the mid-caps are doing quite well. You have a couple of these real estate stocks that have started to surge now. So names like Indiabulls Real Estate up almost about 6%, big volume gains seen over there, and follow-on buying in names like Bharat Forge, TTK Prestige, etc. this morning. But on to a CNBC TV18 exclusive. JK Tyres has opened a new R&D facility in Mysuru. My colleague Rukmini Rao caught up with Raghupati Singhania, the chairman and MD of the company, and began by asking him how this new facility will translate into output and what the demand situation currently is. Listen in.
We started investing in R&D way back in the 80s, early 80s. And because we always believed that until unless we develop technology prowess inside ourselves, we will not be able to compete with the large MNCs, which are very, very large companies, $25, $26 billion companies. So we started investing in that, and ever since we have been investing in R&D, creating different centers, first in Kakroli in Rajasthan, then of course in Faridabad and so on. And then of course we established a unique industry academia partnership center in IIT Madras, which is still working. There's a specialized center for predictive analysis. So then when we needed to grow more in terms of both hardware and software, we didn't have enough space in those centers. So we thought of this idea to consolidate it one location. And there couldn't be a better location than Mysuru. You know, we have a most modern truck retail plant next door. So we thought of Mysuru, and that's how this came about. Here, we have not only consolidated what facilities we had, but we have added a whole lot of other new capabilities for testing, evaluation, and R&D, if you like, real research work in compound development and so on, and of course then evaluation. So we have done it all under one roof, and we have also combined our JK Tyre Tech Center, which is our product design hub, which was also there in Faridabad. So that's one part of this building. So we brought that here as well, and that's what it is, the whole setup about. What we are expecting out of it is a couple of things. Of course, new product development, and we have. I might tell you that last year itself, in 1 year, 2018, we introduced 180 plus new products in the marketplace across the range, both for India as well as international markets. So we propose to continue to develop more and more products, newer products, with better value proposition, with better properties for behavior and economy. For instance, we are already ready with a passenger car tire for e-vehicles with an ultra low rolling resistance. We are ready with it. So this is all a part and parcel of the outcome of such efforts which go on.
Sure. A little bit on the business side, of course, the company had said that FY19 is going to be a better year compared to the previous one. How has the last quarter been? What has been the general sentiment as far as tire business has gone?
Last quarter was reasonably good, as you might have seen. The sentiment-wise, we are looking to a uptick in the marketplace in demand, which is a good thing. Both the passenger cars tire demand is looking up, so is the commercial tire demand looking up. So that spells good for us. Even the OEMs are picking up their production. So that is good news for us as a tire industry. So business prospects in terms of volume growth looks good.
Okay, so they're manufacturing tires for electric vehicles now, and the Kerala issue will hamper the output, but business prospects in general look quite good. That's the word coming in from JK Tyres. But moving on, August is likely to end with a monsoon deficit, with the shortfall pegged at 15%. Joining into detail the impact is RG Agarwal, the chairman of Dhanuka Agri-Tech. Mr. Agarwal, good morning and thanks for joining in. You know, when we spoke to you in the month of June, you had indicated that you expect a 15% revenue growth for the full year of FY19. Sir, what is the expectation now? Given that the monsoons have not panned out that well, there is a deficit in some regions. Should we still expect this 15% growth from the company by the end of the year?
Yes, definitely 15% growth will be there. Now, in the last 1 week, monsoon has picked up throughout the country. If you see Western India, it has received whatever normal monsoon is required. Similarly is Southern Peninsula. There is little bit shortfall in northern part and northeast India. So I hope the monsoon which is active now throughout country, it will cover the shortfall, and we definitely will achieve our 15% growth target this year.
Okay. Mr. Dhanka, what has been the growth in volume so far if you compare, say, April to August of 2018 with 2017? Has it been 15%?
Yes, August we are expecting 15% growth as we have forecasted, and September month we are expecting very good, because this monsoon is not only going to help the Kharif crops, but Rabi crops also is going to be bumper, because the moisture which will be available in soil, which will help in Rabi crops also.
And what about the prices so far, April to August? Were they identical to last year, or have you had to take some price cuts?
No. We have to increase the price of so many products, because you are seeing our raw material is petroleum based. And petroleum prices are going up, and most of our raw materials, intermediates are imported from China, and in China government has closed around 16,000 factories due to environment and pollution issue. So there is heavy shortage of the pesticides, and that is the reason there is heavy increase in the price of all the pesticides.
Okay. So, you have launched a few new products in FY18. You did launch it rather. Can you tell us what the response to that has been, and what kind of growth do you see from the new product launches?
You see, new product launches takes time in establishing. In pharma industry, between consumer and chemist, there is a doctor. But in our field, between company, industry and farmer, there is no such person to advise farmers. So we have to directly reach to farmers. A new product, they are really green technology, better technology, and are accepted by the farmers. But it takes time in our country, where you have 14 crore farmers and 6.5 lakh villages. So slowly we are covering the area, and wherever we are reaching, the product is well accepted and appreciated by the farmers.
Okay. So will there be any new products at all?
This year we are planning to launch a new fungicides in grape segment. And as grape season starts from October, so we hope we'll be launching a new fungicide in grape segment.
Okay, all the best for that. Just one final question then. 2/3 of your business comes from specialty molecules and about 1/3 from generic molecules. Can you give us a breakup of where do you see the bigger growth trigger coming from? Is it in the specialty molecule segment?
You see, in the future, we are going to get good growth from specialty chemicals, because recently you would have seen government has banned some 18 old pesticides. So slowly government is also looking to phase out the old toxic pesticides and supporting new green chemistry. And whatever new chemistry is coming, that is a safer and better technology, where we have to use very low doses of the chemical. So it have very less burden on environment. From that angle also, new chemistry is acceptable, is increasing.
All right. We'll leave it at that. Thank you very much, sir, for joining us with the details, expecting to maintain that 15% revenue growth that the company guided. Meanwhile, as we wind down on Bazaar, actually the market has also wound down a bit in terms of long positions. It's not a big deal, but there is a slight red hue on the Sensex and the Nifty, and the mid-cap index, which had raced up to a 1% gain, is now up but 0.75%. So a 0.25% fall in the indices is noticeable. Remember, our technical experts had gone in with long positions at the dips. So there are long and short positions waiting for you on Chartbusters, a bunch of them. Let's leave you with a snapshot of the important voices that you heard on Bazaar today.
You know, we are looking at the horizon of about 3 years in which we would be able to unlock the exploration potential and start production in some of the blocks, especially the onshore blocks.
JCOMA's order book as on now stands to 9,900 crores, which gives us a very clear visibility for the coming 3-4 years in terms of top line growth.
About 10 to 12 assets were under bidding by the lenders as part of the resolution outside NCLT, and bids have been received in many cases.
Out of the 11 assets that I spoke to you about, 4 we are fairly confident that there will be a resolution outside the NCLT.
The cow base is around 1,000 to 400 crore market, and very soon we acquire at least 10% market share into the cow pure business.